Okay guys, so welcome to my next lecture. So today I am going to teach you all cash basis to accrual basis. How to convert from cash basis to accrual basis. What is cash basis? Cash basis considers only two things: cash inflow and cash outflow. And accrual basis does not consider cash inflow outflow, but it considers income recognized or expense incurred in the current period. So coming these two are the important formulas. Remember this. If you forget everything, just remember the formulas. But today I am going to explain you in detail. So even if you forget the formula, by my understanding, by my explanation, you can solve the questions. Accrual expense. So if there is actual expense, how to convert from cash basis to accrual basis? You have to add cash paid, then add accrued liabilities, closing minus opening, plus prepaid income, opening minus closing. I will explain everything in detail. Accrued revenue. If the question says to find accrued revenue, you have to add cash collection first, then unearned revenue, opening minus closing, then add accounts receivable, closing minus opening, then you have to add accounts receivable write off. There is a crux that for asset you have to add closing less opening balance. For asset you have to add closing first, then deduct opening balance. For liabilities you have to add opening, then deduct closing balance. These are the crux. Now let us understand what is accrued liabilities. Accrued liabilities is liability, that is liabilities which have arisen but not yet paid, or expenses which have been incurred but not yet paid. Which means first we have to know that accrued liabilities is a liability and not an asset. So accrued liabilities represents expenses that have been incurred but not yet paid. They arise from transactions or events that have occurred but the payments has not been made. Common example includes accrued wages, accrued interest and accrued utilities. Liabilities are obligations that a company owes to external parties and they are recorded on a balance sheet, right? So accrued liabilities are typical examples under current liabilities because they are expected to be paid within a relatively short period, usually within 1 year. Assets, on the other hand, represent resources owned by a company that have use. They are on the balance sheet but are distinct from liabilities. Assets and liabilities represent a different aspect of the company's financial position. Okay, therefore, accrued liabilities are recorded separately from asset on the balance sheet. So, let's solve an example to understand it more clearly. So, accrued liabilities, as I said, you have to add opening and deduct closing balance. So if the opening balance is 10,000 and the closing balance is 0, then it says that it's a cash outflow. That is, in the opening we have 10,000 as our accrued liability and in the closing we have 0, which means that our cash has been flowed outside. Okay, so coming to the next one, accrued liability, if opening is 0 and closing is 10,000, then it says that in the current year there was a cash inflow. So coming to the next one, prepaid income. What does prepaid income means? Prepaid income, though there is income over here, but it's a liability. Why? Because income which have been received but not yet earned. Okay, so prepaid income standing in PL is not equal to cash received. Prepaid income, if the opening prepaid income is 10,000 and the closing is 0, means revenue has been recognized. The situation indicates a cash inflow. In the previous period, when the revenue was initially received in advance, cash received before service were provided. During the current period, the revenue was earned. So the prepaid income decreases to 0. as it was recognized as revenue. So it does not represent the cash inflow or outflow in the current period. Instead, it reflects a recognition of revenue that was previously received. So it means revenue is recognized. When the prepaid income is opening is 10,000 and the closing is 0, it means revenue is recognized this current year, but it does not simply says that cash has been collected. No, we can recognize revenue, so it's a accrual revenue. Coming to the prepaid expense are assets. Though there is expense over here, but we need to know that it's assets. Why? Expenses which have not yet arisen, but it has been incurred. So they are considered as asset. Let us go into deep that when a company pays for expenses in advance, such as insurance premium, rent, or supplies, it creates an asset on the balance sheet called prepaid expenses. Prepaid expenses represents future economic benefit that a company will receive as the expenses is consumed or utilized over time. Therefore, prepaid expenses are assets because they represent resources that the company has already paid for and will benefit in the future. As the prepaid expenses is consumed or utilized, it is gradually expensed to the income statement over the period in which the expenses is paid to reflect the portion of the expenses that has been used up. So prepaid expenses are assets. Coming to accrued asset. Accrued assets, accrued income are assets that is income earned but not yet received. Example, accounts receivable. For example, if opening accounts receivable, I said that for asset you have to follow this formula, closing minus opening balance. So if the opening accounts receivable is 10,000 and the closing accounts receivable is 0, it simply implies that $10,000 have been received by the company from the customer in the current year. Okay, so coming to unearned revenue. So unearned revenue is liability. Though there is revenue in the name, but it's liability. You need to be careful. First, you need to understand what is unearned revenue. Unearned revenue arises when a company receives payment from customer for goods or service that it has not yet delivered. That means first you have to keep in mind that unearned revenue is liability and not an asset. Unearned revenue arises when a company receives payment from a customer for goods and service that it has not yet delivered or earned. The company has an obligation to fulfill the goods or services in future. So the payment received in advance is recorded as liability on the balance sheet until the revenue is earned. Okay. So for example, if the opening unearned revenue is $10,000 and closing unearned revenue is 0, it means 10,000 has been earned and recognized this year. So there is an advanced tip. The advanced tip is this one. The asset will be always closing minus opening balance and the liabilities will be always opening minus closing balance. So let's solve all the MCQs. I have 5 MCQs and 1 master question of CPA. So come to the first MCQ. If cash collection were $25,000 and accounts receivable at the end of the year was 8,000 and at the beginning of the year is 3,000. First we need to arrange it. That means cash collection is $25,000 and closing accounts receivable is 8,000 and opening accounts receivable is 3,000. That is, this 3,000 is included in this 25,000, right? The opening accounts receivable at the year beginning stands 3,000, which means if cash collection is 25,000, this 25,000 includes this 3,000. So we need to deduct this 3,000 and the remaining accounts receivable stands 8,000. So closing minus opening at cash collections, the answer stands to $30,000. So the answer will be B. Moving on to the Next one, if accounts receivable at the beginning of the year was, see this is accounts receivable. So in short, we can say that it's closing minus opening. So the cash collection is 10,000 minus closing at the year end stands 1,000. So 9,000 plus opening 5,000. It stands to 6,000. Alright, closing 10,000, add cash collection 10,000, add closing 1,000 minus opening 5,000. This is the formula, closing minus opening. So we did closing minus opening, add cash collection 10,000. So the answer is 6,000. It's very simple. So coming to the next one, when adjusting service revenue, it's revenue. So for assets, closing minus opening. Let's see the question. From cash basis to accrual basis, which of the following item would be added? Which one should be added? Closing minus opening. So closing need to be added. The ending balance of accounts receivable need to be added. So the answer will be A. The ending balance of accounts receivable. Coming to the next question. Next MCQ. ABC LLC has collected $4 lakh of cash receipts in the current year. They had unearned revenue of unearned revenue is a liability. Okay. Unearned revenue is a liability. So for liabilities, we know that it's opening minus closing. For asset, we know it's closing minus opening balance. So unearned revenue stands 40,000 at closing. They also had 15,000 beginning accounts receivable. Accounts receivable is an asset. Okay, so closing minus opening. So accounts receivable at the beginning stands 5,000 and at the year end, at the beginning stands 15,000 and at the year end stands 5,000. So accounts receivable is closing minus opening. It is 5,000 minus 10,000, 5,000 minus 15,000. So accounts receivable will be 10,000. And for unearned revenue, it is 40,000 at the closing. So there is no opening balance, so we will assume that to be 0. So cash collection 40,000, add opening unearned revenue 0 minus closing unearned revenue is 40,000. Then add closing minus opening accounts receivable. The answer will be coming to 3,70,000. So the answer will be D, 3,70,000. I hope you all can understand. The cash collection in this year is the revenue generated this year. So it's accrual revenue. And for liabilities, we have opening minus closing, and for asset, we have closing minus opening. So we will put accordingly. Now the last MCQ, and then we will solve a master sum. Last MCQ says ABC LLC has unearned ticket revenue. That means it is a liability. Okay. For liabilities we have opening minus closing. So unearned revenue of 10,000 as of December means closing balance is 10,000, and unearned ticket revenue of 40,000 at December year 2. See, this is, you have to be very careful. This is not the closing. This is closing of the previous year. So this is opening balance of year 2. Okay. So 10,000 we have opening balance, and closing balance at year 2 is $40,000. The theater records $4 lakh of cash receipts in year 2. So add opening is 10,000 less closing is 40,000. So the answer will be 3,70,000. Now moving on to the master sum. The master sum says that Adam Loan Service Company maintains its books on a cash basis. So the books are maintained on a cash basis. We need to move it to accrual basis. However, the company recently borrowed 1,60,000 from a local bank and the bank requires Adam to provide annual financial statements prepared on an accrual basis. During the year 2021, the following cash flows were recorded. Cash collection was 3,80,000. Cash paid, salary, supplies, rent, insurance, miscellaneous, and deducting all the cash paid from cash collection, we have net operating cash flows. You are able to determine the following information about the accounts receivable, prepaid expense, and accrued liabilities. I hope you all know that which one is asset and which one is liability. Because in asset, we need to add closing, deduct opening balance, and in liability, we need to add opening, deduct closing balance. So over here, the opening balance and the closing balance is given at the year end and at the beginning of the year. So the accounts receivable is 38,000 at the beginning of the year, 30,000 at the year end. So the prepaid expense, supplies, accrued liabilities, all the values are given. In addition, you learn that the bank loan was dated on September 30th, 2021. That is, Adam Loan Service Company took a loan of 1,60,000 on September for 3 months. That is October, November, December. So the company has to pay an interest of 6% for 3 months on 1,60,000. So we need to deduct the interest expense, and the depreciation stands at 16,000. The depreciation will also be deducted. So let's see the answer. I have solved the question in an Excel sheet. So the service revenue is 3,72,000. How? The cash collection and the accounts receivable, which was standing at the year end, will get added, and the accounts receivable which is standing at the beginning of the year, it is deemed that it is received during the year, so it will be deducted. So the cash collection was 3,80,000, less we need to deduct the opening accounts receivable, that is 38,000, add closing accounts receivable 30,000, which comes to 3,72,000. Less we need to deduct all the operating expenses, salaries 1,86,000, then supplies have an adjustment. Supplies is considered as an asset, so at closing less opening, so we need to add 31,000, add closing 1,800, deduct opening 1,600. It comes to 30,800. Rent expense 15,000, we will get it from the question. Insurance, we have adjustment to insurance. The insurance, prepaid insurance. Prepaid insurance is an asset, so we need to add the closing and deduct the opening. So insurance is 12,000, we add the closing 2,600 and we deduct 0, which comes to 14,600. Then we have miscellaneous expense, which is 26,000. It has an adjustment, it's an accrued liability, so it's a liability. We need to add opening less closing. We added 3,000, less we deducted 4,000. It stands to 25,000. Then we have depreciation 16,000. Net operating income, deducting all the operating expense from service revenue, it comes to 84,600. Less we need to deduct interest expense, that is the company borrowed 1,60,000 for 3 months. September year end means we need not consider September, we will consider October, November and December for 3 months for 6%. So the interest expense is 2,400, we will deduct it from operating expense and it's coming to net income. Thank you.